So let's get this straight. You open up your phone, you see the news. Story 1, tech giant reports record-breaking profits. They're basically swimming in money like a modern-day Scrooge McDuck. Then you scroll down. Story 2, same tech giant lays off thousands. Wait, what? It feels like reading a headline that says man wins lottery, immediately declares bankruptcy. How do you make all the money in the world and then turn around and tell the people who helped you make it, yeah, we don't need you anymore? It's the great tech paradox of our time, a real head-scratcher. This isn't just a one-off thing, it's a trend. We're talking about the biggest names in the game, the companies that are more a part of our daily lives than, I don't know, drinking water. Think about it. Google, Amazon, Oracle. These aren't some struggling startups working out of a garage. These are global titans, the Goliaths of the industry. They're reporting profits that have more zeros than a pirate's treasure map. Alright, let's talk numbers because this is where it gets really crazy. When we say these companies are making money, we're not talking about finding a $20 bill in an old pair of jeans. We are talking about astronomical sums. For instance, Alphabet, that's Google's parent, for those not keeping up, regularly posts quarterly revenues in the tens of billions. That's billion with a B. Their net income, the actual profit they get to keep, is often so large it's hard to even comprehend. It's more money than the entire GDP of some small countries. And it's not a fluke, it's a consistent upward trend. Amazon is another perfect example of this financial wizardry. The company is a machine. Every time you click buy now, you're feeding this gigantic engine of commerce. Their financial reports are a sea of green arrows pointing up. Revenue growth? Check. Cloud computing dominance with Amazon Web Services, AWS? Double check. They are expanding into new markets, healthcare, groceries. By all traditional measures, this is a business that is not just surviving, it is thriving in a way that most companies can only dream of. So here's the billion-dollar question, literally. If Google is making more money than ever, if Amazon's empire is expanding, if Oracle's strategy is paying off, why the layoffs? So, why are these profitable giants kicking people out? The most common word you'll hear from the CEOs is efficiency. It's the new corporate buzzword. It sounds so clean, so responsible, doesn't it? We're not firing people, we're optimizing for efficiency. It sounds like they're just tidying up the office, not upending thousands of lives. Often it's code for a few things. First, it means they hired a lot of people during the pandemic tech boom, and now they're right-sizing. They overhired, and now they're correcting, with the employees paying the price for management's miscalculation. Then there's the big one, automation and AI. This isn't science fiction anymore, it's happening right now. Many of the jobs that were once done by humans can now be done faster and cheaper by a clever piece of software. Think about certain roles in customer service, data analysis, coding. An AI can now write basic code, analyze a spreadsheet in seconds, or handle customer queries without needing a lunch break. So, a company like Google might look at a department of 50 people and realize an AI tool can do 80% of their work. Suddenly, efficiency means replacing people with programs. Another piece of the puzzle is shifting priorities. A tech company is like a shark. It has to keep moving or it dies. A project that was the next big thing 2 years ago might be old news today. For example, a company might decide to pivot away from, say, virtual reality headsets and pour all its resources into artificial intelligence. Finally, it all comes down to pleasing Wall Street. Investors love the word efficiency even more than CEOs do. When a company announces layoffs, its stock price often goes up. It's a perverse incentive. The market rewards companies for cutting costs, and the biggest cost is often people. So even if a company is insanely profitable, the pressure to show even more profit next quarter is relentless. It creates a situation where companies lay people off not because they have to, but because it looks good to the people who own their stock. What this all tells us is that the old rules are gone. The idea that a booming company equals a safe job is a fantasy from another era. We're now in a time where growth and layoffs can and do happen at the same time. For workers in tech, this is a harsh new reality. Loyalty to a single company might be a one-way street. Your incredible performance and dedication might not be enough. Decisions in a boardroom can change everything. To realign strategic priorities, to enhance operational efficiency. It's a tough pill to swallow. This isn't to say these companies are evil. Their business is built to maximize profit. In a capitalist system, that's the game. But the game is changing. The rise of AI and automation is a fundamental shift. We are only in the very early stages. This wave of layoffs may be just a preview of a larger transformation. The question for society: what do we do when the most successful companies need fewer and fewer people to generate more and more wealth? That is a big, big question. For the individual, the lesson is adaptability. Skills valuable today might be automated tomorrow. Continuous learning, being ready to pivot. Those are survival skills. Build a career less dependent on one employer. Focus on a portfolio of skills. Skills that can be applied in different places. Shift from being a company man or a company woman to being a free agent, always ready for the next play. It's exhausting, but maybe the new normal. This paradox forces a bigger conversation. What is the purpose of a company? Only create value for shareholders, or also responsibility to employees and to the community? As AI gets more powerful and efficiency becomes easier, we'll decide what economy we want. One where gains go to a tiny few at the top, or one where technology's wealth is shared more broadly. Right now, it looks like we're heading down the first path.